Portfolio Manager at eNCA Capital, Martin Smith, joins me now to discuss those movements further. Martin, as always, many thanks for your time. I want us to start with the overall markets. I mentioned in my intro that from around Wednesday, we saw a calming down of that huge sell-off that we saw in Naspers that was dragging down the local bourse. What would you say was the biggest contributors to the volatility we saw on the local bourse, as I've also mentioned, just Naspers?
So amongst what we seen out of Naspers and obviously Chinese regulation coming through, there was a lot for investors to digest. Obviously, we had the cabinet reshuffle. We've had GDP numbers out of the US in the last little bit. We've had jobs numbers. So there's been a lot on the go. Obviously, you mentioned the Delta variant as well. So there's a lot of things happening. And like you mentioned, I mean, this Chinese regulatory crackdown was kind of been on the go for the last few months. We saw Naspers selling off quite aggressively last week and then kind of rebounding. I think people are hoping that we're at the end of the kind of regulatory cycle that we've seen out of China with regards to specifically tech companies as well as educational companies. So companies like Tencent, which obviously filters into Naspers' story for South Africans, have felt the kind of full effects of that. Interestingly, Tencent was up about 5% today. It didn't quite filter through to Naspers, which was only, end of the day, about 2% up. So very interesting to see how it all unfolds. But one thing I must say is Chinese companies are looking quite cheap if you look at the likes of Alibaba and Tencent.
Right, and I'm glad you mentioned the cabinet reshuffle. There was an anticipation that we might see better movements in the rand, which hasn't really happened. Do you think that market participants or potential investors are adopting a wait-and-see approach to see how this new finance minister is going to be handling the country's fiscus?
Yeah, I think you're absolutely correct there when you say a wait-and-see approach. I think by large, the reshuffle was relatively stable and no massive surprises. Obviously, we know with Tita Mboweni, he's been wanting to step down for a little while. So it is very much a wait and see on the new minister. Yes, the rand weakened a little bit, but nothing massive, nothing significant from where I'm kind of viewing it. So again, a wait and see, and the rand remains range bound from here as well.
Right, let's move on to some company news now. AngloGold share price falling around 10%. They're saying profits will be falling around 10%, and the share price fell around 8.5% in afternoon trading. I was rather surprised given the kind of numbers that mining companies have been providing for their investors, and then AngloGold comes out with this. What did you make, and really just around the reasons that they're saying this is why they're going to be reporting those numbers?
So not all commodity or mining companies are made the same, as you know, given that they all have different commodity exposure. So if you look at the likes of a Sibanye or a Northams, you've seen what PGM prices have done over the last while. It's been absolutely incredible, which is why the companies are producing the free cash flows that we've seen. But if you look at AngloGold Ashanti, what has gold done year to date? Maybe down 4%, give or take. So for me, it's not a massive surprise given the commodity exposure they've had. So you link that with the fact that production has also been revised downwards and has been a little bit lower than we initially thought. And pricing was also a little bit higher from them in terms of the cost pricing in the business. So higher costs, lower production, not really in the sweet spot in terms of the commodities they're exposed to. So for me, not a massive surprise. But yeah, the market reacting quite negatively. I think it ended the day down about 12%.
Yeah, quite a sharp fall indeed. Finally, Martin, banks, we had ABSA and Standard Bank giving us trading updates today, both indicating that they're going to be seeing a strong recovery on their balance sheets. And this is after the devastation that COVID-19 gave to them. But I'm wondering, is this a recovery off a low base, or is it an actual solid recovery for both these entities?
So I think it's a bit of a nuanced answer, and the banks rally really started with those results out of Nedbank, which were also very, very strong. So we saw strong results out of Nedbank, and then obviously Absa and Standard Bank today, well ahead of expectations and consensus. So a couple of things to unpack. One, yes, you have absolutely correct when you're saying it is off a low base. But two, I think these banks position themselves really, really well insofar as the provisioning that they did going into the pandemic and during the pandemic. So I think they've managed themselves really, really well during a very difficult time, and they're obviously now reaping the rewards of that. So yeah, very, very good if you hold banks in South Africa.
Martin Smith, as always, thank you very much for your time. That's Martin Smith, who's a portfolio manager at eNCA Capital. I'll be